Hey folks, Thursday the 10th of February 2022. Good morning, everybody. So, what we have today is Thursday CPI day out of the US. I think we're expecting on the headline figure here core CPI month on month for Jan 0.5%, prior 0.6, year on year 5.9%, and then the CPI year on year 7.3% above the prior 7%. So, all in all, I think the market is going to be looking at the CPI year on year figure here, 7.3%, as the prediction for today. I think if the market gets a figure of like 7.4 and above, that is going to feed into the concept that the Fed may move to raise rates faster. But that's what I've read this morning. But really, I don't know if they're going to be looking to raise rates faster than the current projection time of starting in March. So that's really what the market has priced in. And should we get a 7.4 or above inflation reading today on the year-on-year CPI, I think the market's just going to shrug it off and keep moving higher. We have the price hikes priced into these equities markets right now. We have, I think it's like five hikes priced in for this year. Um, so yeah, we might get higher inflation, but really, I don't think the market cares anymore, and they do know that the Fed have their plans all set in stone, ready to go. So, with that, let's get over and have a look at where we're trading on these charts, and you're seeing really the Nasdaq yesterday. One thing that the main thing we've been looking at is the closing of this gap here, the yellow area. So this gap was from the overnight trade Wednesday the 2nd into the Thursday the 3rd of February. So it was left open for quite some time on Nasdaq, and we had to come down, test 14,370s and three quarters before finding those bars to bring us back up. And sure enough, yesterday on the open, little reversal down onto the 14,853s, bottom of the gap, and then a reversal back up. So that was kind of an opening drive reversal. So it wasn't so much of a drive, it was quite slow action to come down here and then reverse and drive back up into the close. So you can see now the 200 EMA was that target on the closing session last night. However, really, we may get a pullback here, but I think top of the gap and above is really set in stone now for this marketplace on the Nasdaq. So that's really what I'm looking at here. SPOOs, we can jump over. Look at this on the daily. So we're holding on the 50 EMA this morning already. You can see that APAC low, 1, 2, 3, 4 touches holding the bid. So that's quite bullish for this market. Can't really look at trading back through this line in the sand anymore because it has been pretty much traded out yesterday. But even if we do, I'd be looking for buyers to come in at 45.57 quarter, and really the target is that 45.86 above as an interim target, and that is the high from last Wednesday. Of course, we did actually have another gap down there as well, similar to the Nasdaq. I'll draw that on the chart since you've seen that gap closed on the SPOOs. So if we do push higher, it's going to be 46.19 and three quarters, which is actually the low of the 10th of November 2021. So you see that on the right hand side of your screen there. All right, I'll drop that down. Let's have a look at the Dow on the daily. So yeah, job done in the overnight session here. Tested up on this trend we've been looking at. That's done. And I think, we may have a little bit of a reversal down to test on this sort of area around 35,312s, let's call it. And that's the high, actually, spike high on the 13th of August 2021. And that'll be testing the 50 EMA then as support. Now, are we going to get that sort of a reversal in the face of the SPOOs on the Nasdaq looking to move further up? I think so. I think we need that before we can then push above on this trend. So, but I am open to this thing having an opening drive to the upside today. So, We were looking at the Dow yesterday. It wasn't really that nice a market. It's easy in hindsight to see here that the market really just was sitting around. Once we opened, we put in a low from the pit and then tested that twice before then holding high on the close in the session and then completing that movement. So very tight action here on the Dow. So for me, I think I'd rather sit this out and wait for support to be tested down here, 35, 348 and 312 is this sort of area here. That's it on those US equities. Oil's been a beauty. Oil has absolutely been beautiful. Again, this 88, 84s coming in yesterday. Very tricky in some respects. But once we had the open here, DOE then really a lovely action yesterday on DOE. Nice push drawdown of 4 mil. That's 2 mil bigger than the API had read in on the privates. So, lovely pullback. Didn't even trade the 84s, but some nice value areas here to be buying and then getting on the longs. And indeed, those areas were really well tested here at the 1 o'clock marker, pushing up and holding that through DOE. Actually wasn't too bad, really. These DOEs, the volatility is quite dead on them recently, but we're holding into the highs on the session now. Target 9105s above. You can see that has been acting as a bit of a shelf and just lost it there on Tuesday. So down we came, retesting 88 spot 84s. No need for alarm for the bulls. Just another area to load up on the longs and look for the big push. So, um, you know, I do firmly believe we are going to trade 93.50s again quite soon, and then we can get on with getting on further up into these bigger areas. So, breakdown around here, we kind of see that there was a little bit of an attempt to break down the shape of this market yesterday, just sliding under the 88, 84s, but generally holding up quite well for the long. So yeah, I mean, looking on the long side here for oil and gold, gold in the background has been putting in a great oil performance, just one direction all the way, doing a bit of a Harry Styles here. So I think we need to test into this line in the sand here, R2 possibly to trade, but I think we can just range back down. So CPI to come. Let's see what sort of fireworks we get on this. But already this market, I'd say there's bears looking to short this thing down now. No matter what the head of commodities says in Goldman Sachs, I think this market, I think by the summertime, we're going to be trading above 1850s. But does that mean we just get long now market? No, it doesn't. You need a risk profile, and I think a reversal all the way back to 1809s at some point could be on the cards, and then a breakout to the upside. So, but for trading today, I'd fancy the shorts in this whole sort of area here, and then just trading the structure pattern down again. So that's it really. And the euro, don't really have a view on the euro at the moment. It is holding very well over 14,120s. Still interested in longs at that area. Nat gas, yeah, nat gas has kind of been sliding off a cliff really since 2 days ago. There is a dissipation, of course, of this invasion risk in the Ukraine, and that means that instability in the nat gas environment is going to come off a little bit, or subside, I should say, a little bit. So I do like. I'm going to be looking for longs down around 3 spot 860s and this sort of trend support here. So I'll show you that on the daily bar chart on that gas. So it's really this trend here, coming in from the low of the 28th of December 2020, and then also the lows around here, the 6th of April 2021. So yeah, quite a ways down to go, but I think that's a better place to be looking for a long. And I do kind of only want to be working on the longs in that gas at this time, albeit if we had a short opportunity, it would be a pullback onto the 4149s up above. All right, so Um, that is it for me for another pre-US session. CPI half one today, and yeah, look, take it easy. You don't have to trade on the data as it happens. You get really good trade opportunities. 30 minutes thereafter. So just be careful out there. All right, remember one thing only: only take the good trades, leave the rest of them alone. All right, have a good session. Talk to you later.